Hello, everyone, and welcome to all our attendees. My name is Bridget Maloney, and I am the Managing Director of GEDI at the University of Waterloo. GEDI is the gateway for enterprises to discover innovation at Waterloo. The University of Waterloo is proud to host this series of 6 panel sessions. COVID-19 has shaken the world, challenging societies and altering life as we know it. But from this crisis, opportunities have emerged, calling us to action as we prepare to reboot from the COVID-19 lockdown. How we work and behave, how society and the economy will function, and how we innovate and educate will change. Plotting the future for Canada, your enterprise, and yourself is complicated and challenging. Our researchers and university partners are happy to share their research and perspectives. So a couple of logistical items. If you have a question for our panel, please send it via the WebEx Q&A. So click Q&A in the bottom right corner of your window and ensure to choose all panelists before typing your text. This event is being recorded and will be uploaded to the official UWaterloo YouTube channel after the event. And now I would like to introduce our moderator, Besma Momani, Professor of Political Science and Interim Assistant Vice President, International Relations at the University of Waterloo. Besma.
Thanks, Bridget, and welcome everybody watching. If you're in Waterloo, good afternoon, and if you're somewhere far and beyond, hello to you. I'm very excited about what we have today. We have a very interesting group of professionals, experts, academics, all in one to talk about rebooting. This is a very important topic, of course, for all of us. We all want to get back to work. We all want to get back to our lives, and how do we do that? So this is a great series. I hope you'll think about, joining all the other ones. We're just kicking it off, and I'm sure there's going to be lots of questions. So hold on to that. At our 58th mark, 58th second or minute mark, we're going to come to you and ask you some questions. Okay, so I'm a political economist by training, so I'm going to hog the mic here for a second just to give you a little bit of what I'm watching for and give you a sense of what I see as the sort of overall global economic picture. It's not looking good. I think that's the summary of it. But what are we seeing? We're seeing a lot of decoupling and trade. Basically, you see that in terms of supply chains really not working effectively. Certainly, we're going to have a whole section on supply chains in the coming weeks, so stay tuned to that. But most of us who are interested in the economic situation see an enormous collapse of consumption. It's obviously all of us. We're sitting at home. We're not buying as much. If we're not buying as much, we're not producing. And that's a global challenge for all of us. As you all know, of course, we are seeing talks of also bringing things back to home. So this concept of localization has become a real feature of a lot of discussions on the global economic scene. Are we going to be producing these things here at home is a big question. Are we going to see the bringing back of manufacturing? I'm personally a bit pessimistic on that. I think we're going to see automation, not necessarily the great manufacturing jobs of the past. That's something I'm sure we're going to talk about in our conversation today. The other thing that I think we're all looking at is less economies of scale. We're not going to be efficient the way we once were. Our concept of productivity has to change. And that's just obvious. If you look at your grocery store, you look at every sector of our society, how we function in terms of that economies of scale that we had taken to heart as being an important fundamental way of thinking about productivity is going to have to change if we're going to do social distancing right. And we're clearly going to be doing social distancing for at least a year, maybe beyond. We don't know. So all of this is some of the big questions I'm thinking about. Certainly one that I'm very conscious of, and we'll talk to some of the experts who I'm sure are following this as well, is this idea of lots of companies may go under. That means there's going to be mergers. Is this going to be a rise of oligopolies in a lot of the business sector? Are we going to see big fish eating small fish? And that, of course, is not great for competition. So on that framework, I'm going to turn to one of my favorite economists. Craig, you don't know this, but I followed you for many years. So Craig Alexander, thank you for being with us. Craig is the chief economist at Deloitte Canada. And I'm going to turn to you first, Craig, because I really want to get your sense of how do you see the big picture. You are a big thinker. You've always had that big global macroeconomic perspective, but bring it down a little bit closer to us here in Canada. What should we expect in terms of the Canadian economy? What are you watching for?
Sure. So one of the challenges we have is that Statistics Canada data tends to be lagged by a month or two, right? So this Friday, we're going to get retail sales numbers for March, and that'll only pick up the weakness in retail before the lockdown in the second half of the month. But Statistics Canada has been trying to accelerate the economic releases, trying to get as much information out as fast as possible. And we now know that the Canadian economy contracted by 10% annualized in the first quarter. When we look into the second quarter, we know that the economy contracted 9% in the first half of March. So we could expect at least a similar decline in the second half of March when the lockdown was enforced. And so as a consequence, what that means is that the annualized change of the economy in the second quarter, we're looking at currently tracking around a 40% annualized decline. Like, these are stunning numbers, and we've never seen them outside of recession type environments or depression like environments. So, the other thing to say about that though is it shouldn't come as a surprise. Right? We all know that we shut down non-essential economic activity. So of course the economy was going to plunge. So I think the more important thing is where we headed. The policy response has been enormous, and the fiscal and monetary stimulus, I think, reduces the risks that we're going to have a depression. I think what we're likely to see is a very deep recession followed by a very long and slow, drawn-out recovery. And the reason that that recovery is going to be very slow is that we are only going to gradually reopen the economy. And as you said, it's not going to be business as usual. The virus will still be out there, and that is going to mean that there's going to continue to be economic distortions. I do think we're going to have to interpret the economic data very carefully, because I think the numbers could actually look quite good and yet the activity be quite low. So I'll give you an example. Imagine you have a car dealership that sells 100 vehicles, a month prior to COVID. Now let's say that the showroom's shut down and they're only selling 20 cars a month online. Okay, now we go to reopening the dealership, and as a consequence, their sales go up to, say, 40 cars. Well, StatsCan's going to report there's a 100% increase in sales, but in absolute terms, the volume of sales is going to be very depressed. And I think that's the sort of challenge that we're going to be dealing with as we move into the recovery phase, that in point of fact, there's going to be long-lasting legacies from this environment. You've already touched on many of them, but the way I think about it as an economist is we were already having structural changes in the economy. We were dealing with how do we address climate change and an aging population, weak investment and poor productivity, and politically the rise of populism and nationalism. And those factors are still present. But then the COVID environment has accelerated other trends. This includes the rise of debt. Coming out of this crisis, we're going to have more indebted households, more indebted businesses, and dramatically more indebted governments. This is going to be a challenge to deal with. The current environment is changing the nature of work, where it's pushing more Canadians into remote work, and I think that's going to be a lasting effect. I don't think we're going to return to the offices anytime soon. Even when the governments reopen the economy, from a point of view of Deloitte, if we could only have 3 people in an elevator, it could take us all day to get our staff into the tower in Toronto. So clearly we're not going to do that. So there's going to be a changing nature of work that's going to be accelerated by the current environment. The shift towards digital is being accelerated. The shift towards AI and automation is being accelerated. And then there's key trends that didn't exist before or weren't already present, and that is the disruption to supply chains that you mentioned. As countries think about building essential products domestically, this can lead to industrial sovereignty and deglobalization. It's very clear that we're going to have an increased role for government. If we think about it, government is now doing business, and many businesses are doing what governments do. So, we've ended up in a very different world, and I think that the expanded role of government is going to be with us for some time. And one of the fundamental issues that we're dealing with and our clients are struggling with is the fact that consumer behavior will change. And we're actually seeing that in terms of other countries that have now exited the lockdown. So in China, in Germany, foot traffic in the retail sector is only running at about 20% of normal foot traffic. Consumers don't want to touch products on shelves. They don't want to. They want to. They buy more on each trip because they want to make fewer trips to the store. So as a consequence, we're seeing that the behavior of the consumer is different. And we do wonder that even after we have a vaccine and it's deployed, could you still have some lingering impacts in terms of changes in consumer behavior? Because there's so many trends that are impacting the economy, this creates a lot of uncertainty as to the exact path the economy's on. I'm confident we're going to see, as the economy reopens, we're going to see growth reemerge in the third quarter of the year. But the shape of the recovery could differ greatly based on the key trends I just mentioned. So we recommend that businesses and governments don't rely on a single forecast. We think that it's important in this environment to think about scenarios. So I'm going to stop there, but I look forward to the questions.
Thanks, Craig. And you've brought up a lot of interesting points. We've heard a lot of this question of whether or not we're going to get a V recovery, a U recovery, or what's called the swish recovery, the Nike swish kind of recovery. This idea that, as you said, the stats may show that we're going to just hit this rock bottom and then climb up again. Are we going to have this very low, slow incline in terms of recovery? It's all very unclear. And as you also point out, stats are coming in slow. And I think a lot of companies aren't necessarily reporting all of their annual reports at this time. We're seeing just a backlog, right, of us being able to talk about what the damage was, as we're still very much trying to reassess it. So thank you, Craig, and I'm sure we're going to come back to you to talk more about some of these particularities. So let me just, if I may, switch to Joel, my colleague Joel, on two accounts. Joel Blitt is a associate professor at the University of Waterloo in the economics department, and is also a senior fellow at the Center for International Governance Innovation. So thank you, Joel. I think you are one of the leading Canadians who talk about innovation, and I'm a great fan of your work too. We've had many great conversations. Let me ask you a little bit about how you see things going on, and to segue from where we had this conversation with Craig. So where do you think, or where do you expect or hope that there might be some sort of recovery? We're all hoping for some good news. So tell us, Joel, what are you looking for in terms of the potential for recovery here in the Canadian economy?
So let me start, and maybe it's because both Craig and I are dismal scientists, but I'm similarly pessimistic as Craig is. I think this is going to take a really long time. People that are hoping for a V-shaped recovery really are kidding themselves. I look at the markets every day, the stock market, and it's trading at like 12% below the peak, and I'm absolutely confused. Like, it seems like investors know something that I don't know, and every other economist doesn't know. In terms of what to expect, we have to keep in and why it's not going to be a quick recovery. We have to keep in mind, I think a lot of these points Craig already made, right? But we have to keep in mind that we were already at very high risk before COVID even hit. We're the longest economic expansion in recent history, especially in the US. Asset prices were through the roof, whether it was real estate or stock markets, basically everything. Personal debt was through the roof. And what we've now seen, and I agree with Craig that data from StatsCan is coming out really slowly, but one piece of data that is coming out fairly quickly is the labor force survey. And the labor force survey shows that in the first month and a half of this, there were 5.5 million Canadians that either lost their jobs or were working at less than 50% of the hours that they were working before. So this is massive. It's hitting us really hard. And why do I not expect a V-shaped recovery? Well, first of all, so we can think of it in terms of demand and supply. In terms of demand, as Craig was saying, governments have taken a hit to revenue, so they're probably going to be spending less, and they've also spent a lot, so they have debt. Same thing with consumers, right? So their debt has been going up, their income has been going down. Same thing with firms. So in terms of demand, it's going to be depressed. Moreover, there's a whole bunch of uncertainty in the system, and when there's uncertainty, firms are not going to go and hire everyone as soon as there's a spark of. They're going to wait and see what happens. And similarly, for consumers, I'm not going to go out and buy a car if I don't know what's going to happen in 3 months' time. We can also think about the supply, and this is where I may be getting more to the question, Besma, that you started with. And in terms of supply, when there is a recession, resources start to be reallocated, and there is more automation and there is more innovation, but that takes a long time. And paradoxically, because all of this is taking place, and I'll expand on this in 1 second, it actually is going to lengthen the economic the time for an economic recovery, because firms are going to spend a lot of time adjusting and actually laying off workers, at the very least not hiring them back. So let me expand on that point, since that's probably, where as an innovation economist, I know the most about. The reality is that over the last 25 years or so, 30 years, we've often talked about jobless recoveries, right? So the economy recovers in terms of output after recession, but it's mostly a jobless recovery. Now, why is that? Well, that's because of these routine jobs. So what we have found is that routine jobs are being lost during these recessions. Okay, so this is a trend that has been occurring over the last 30 years. Routine jobs have become automated, but it doesn't happen sort of in a steady stream downwards like this. What happens is a recession comes, there's a huge drop in the number of people working in routine jobs, and then it kind of steadies again, and then there's another big drop. But the important thing that happens here is that these jobs get lost during recessions, and then they don't bounce back as the economy bounces back. That is not true of non-routine jobs. So what can we expect to see? We can expect to see exactly the same thing in this recession. And I would actually argue that it's going to be more so because of the specific COVID impacts. And so let me just expand on that a little bit more, and then maybe I'll stop there. So the first thing that's going to happen is the redeployment of resources, right? And so we can think, and this always happens during recessions. And so we're going to have firms that maybe were relatively unproductive, and their resources, whether it's workers or capital, are going to be redeployed to more productive firms. This is one of the benefits of recessions, is that we can come out the other end more productive, because the firms that are more productive get more of the stuff. In the case of COVID, there's actually going to be reallocation on other dimensions as well. So for example, from brick and mortar stores to online stores, or from restaurants to companies that are delivering the different ingredients for us to make meals at our homes. Okay, so there's going to be other dimensions as well. So that's going to be the first piece. The second piece is that recessions are an important impetus for firms to trim costs and to develop new products and to do innovation. One reason for that is that when your back is against the wall in terms of costs, well, you have to find a way to lower costs, and one of the ways that often happens is through automation. Another explanation for this is in terms of opportunity cost. When you have a firm that is, if you have a manufacturing firm and the economy is going super well, that is not the time to shut down your production line in order to go in and automate it, right? Because automation is not going to be overnight. You're going to have to shut things down. You're going to have to slow down production for a while before you can get up to speed again. So now's the time to do it. And so now we should expect to see automation. So these are all things that we've seen in the last 3 recessions. We didn't see this, by the way, before the 1991 recession. In the 3 earlier ones, that was not the case. We weren't seeing automation, but now we are. Now with COVID, there's going to be an additional thing that's going to happen, which is if you're a manufacturing firm and you've got a production line, now you have even more incentive than in any other recession to replace these workers, because your workers are actually what is creating a lot of the uncertainty. Because if we once again have another wave, or because they get sick or anything like that, you basically need to shut down your production line or slow it down. So the first thing you're going to do is say, okay, where are my biggest risks? The workers. Let me try and replace those with automation. Secondly, even if you don't replace all your workers, you're going to say, well, I don't want workers working right beside other workers, because that's going to increase the transmission rate. So what am I going to do? I'm going to make sure that workers, are the ones that I keep, are working with robots around them and try and minimize that human contact. So for all those reasons, what I really see coming up is a tremendous amount of automation. Now, I think that's sort of the silver lining in all this, is that if we play this right, and if government incentives are aligned with where we could come out of this eventually as a much more productive economy. And again, we shouldn't forget that we should make sure we distribute those productive gains to society, because there is going to be a lot of hurt.
you know, if I may, I just want to quickly point out that this concept of the digital transformation of the business sector is really key here. You know, were companies ready? I look at the examples, not to pick on certain companies, but you look at Home Hardware versus Home Depot. One had a website that was ready to go and sell everything, and one didn't. And so we're going to see those who didn't, pick up on that digital transformation, at least on the retail side, for example, really hurting. And it just really, you've really just pointed out this further, drive towards automation and bringing back what Craig said about AI. I mean, this is an opportunity to find ways of advancing and finding new ways of being efficient and productive. But certainly the question of how or what this means for laborers, for people, doesn't sound like a very good story. So on that, let me switch to Neda. My colleague Neda Basir is the associate professor here at the University of Waterloo in the Conrad School of Entrepreneurship and Business. And Neda, you've been following how this is impacting the business sector very carefully. I know we've had some bilateral chats on this too. What worries you the most? What are you watching and looking at this landscape? And what is it that you find that is going to be the most potentially impactful thing happening on the business sector today?
Thank you so much, Besma. It's an assistant professor, not quite associate yet, but hopefully on the way. When it comes to the business sector, and in particular, there are a few things that are especially worrisome as we think of the impact this pandemic has had and will continue to have, and how we come out of it. The first thing is the global and widespread this virus is, its impact is very disproportionate. Some people we've seen are at higher risk for health reasons, also due to socioeconomic factors. Some countries have been hit harder than others, and some businesses and industries are obviously going to be impacted more than others. So retail, hospitality, food, in the airline industry. So without question, all industries are impacted by the current conditions. But my real worry is with small and medium-sized businesses. That is the backbone of our economy here in Canada. They support over 70% of our jobs. They make up over 90% of businesses in Canada. And they won't have access to, possible government bailouts. They're typically cash strapped to begin with. So even when the economy was doing better, most of them didn't have more than 30 days of cash on hand. So the future is especially troubling for them. And, when you ask me what worries you, it's these guys and girls. And the thing is, so when SMEs suffer, the economy suffers, especially here in Canada. So right now, these smaller businesses are the ones being hit the most. And, Joel talked about the most recent Canadian labor surveys. I want to dig a little bit more into that, because what we're seeing are huge differences in the number of workers laid off, according to the March numbers, by firm size. So smaller companies are experiencing the worst layoffs. We're talking about double digits here, close to 50% of their workforce. And while larger companies, at that point, we're still in the single digits. But remember how I told you that this pandemic is incredibly disproportionate in its impact? Well, if we dig a little further into those numbers, it's jobs, female jobs that are evaporating. And I want to spend a little bit of time talking to this because of my research and my interests, but also because I think it's important for everyone, not just one gender. So 2/3 of newly unemployed workers were female. I'm gonna let that sit in for a moment. 2/3. This has broad consequences. Job loss is hard for everyone, of course, but recovering from it tends to be harder and takes longer for members of disadvantaged groups. We have lots of research that shows this. Women and minorities typically spend more time looking for new jobs. These jobs that they eventually find generally pay less than the ones they left. So if you lay off women and minorities disproportionately, you don't just hurt them, but I think we're going to see an even slower overall economic recovery. Some people have referred to this as the she-cession, and I think for really thinking of rebooting, we need to address this. Now, The other point I want to mention, and I think I'm going to take a bit more of a positive tone than Joel and Craig, is that part of my worry is that I think at the next stage, as we build forward, how do we ensure that we're building resilient and responsible companies? In other words, how do we build back better? And here, this is where I think there is opportunity, that as we build back, we take this, what can we do better than what we did before? Not think of business as usual. Research shows that resilient companies tend to bounce back quicker after shocks in the environment, and these are usually the ones that are responsible runs, right? So before, during, and after these shocks, they're not just thinking of short-term financial outcomes. So the crisis is going to exacerbate existing inequalities and create new ones. I think businesses play an essential role in mediating this. But like, regardless of the moral discussion here, responsible businesses tend to be more resilient ones. So they go hand in hand. So, we've talked about supply chains. If we think of, if we're re-engineering our supply chains moving forward as we rebuild, the socially responsible way forward is to maybe think about, sourcing ethically, keeping as much of it local as possible. These socially responsible decisions also mean more resilience when crisis occurs, right? You're able to mitigate risks much better. So we're seeing some short-term results that show that companies that have prioritized their workers and their customers during this crisis are doing better in the market. Prior research, looks at investing in corporate social responsibility creates trust and this propensity to kind of reciprocate, and this leads to greater resilience. And part of the reason is because, trustworthy is more valuable in times of uncertainty. So these are things that, companies should be thinking about. And, like, I get it, for most CEOs and founders, top management, survival is probably top of mind right now. But I think a short way of thinking can be a mistake. Employees, customers, suppliers, communities are watching. And if this pandemic is teaching us anything, it's that, people and organizations are interconnected and responsible to one another and to society in ways beyond short-term earnings. And our vulnerability and our empathy have kind of been awakened. And it's possible that, after all of this, the expectation on the private sector will be fundamentally altered. And I think for the better.
Really important, issues that we need to think about, when we've been so inundated with this idea of just-in-time manufacturing, for example, this idea that, it's sourced in China and it comes to our door, doesn't spend a minute in the warehouse too long. And in many ways, what we're seeing in terms of just the retail sector, that's been expedited in a way like never before. And if you think about just, are there going to be stores anymore? I mean, this is the kind of things that we need to think about in terms of, scenarios for the future. But that has an impact. I mean, sorry for the term, I hate the term, but pink collar jobs, they're service oriented. They're the ones actually at that retail sector. And if we think about small and medium sized firms, as you pointed out, this is often where, we are going to see that kind of gobbling up of large companies taking over the small ones. But you pointed out a really important point here, which is adaptation. How do we prepare? And I want to turn to my colleague Sanjeev Gill. Sanjeev Gill is the Associate Vice President of Innovation and Lifelong Learning. And so this is a chance for us to be innovative at our finest. So Sanjeev, I want to turn to you and ask you about how can companies prepare? What are the tools that they need now more than anything in terms of innovation and lifelong learning?
Yeah, thanks, Vesma. I'm going to hopefully have a bit more of a positive tone. I'm not an economist, but I have a very different perspective, mainly because of the conversations we've had with industry. And as many of you know, I come from industry, 25 years in industry before joining the university. But as we've sat and spoken with CEOs and other business leaders across the country, three common themes really emerged from those conversations. The first, I think we touched on here a little bit, and we may a little bit more, and that's this sense of nationalism, this sense of deglobalization, if you might. So specifically rethinking of local supply chains is one area. The second, repatriating certain areas of manufacturing, specifically around essential supplies. I won't touch so much on that. The other two are very interesting. One is the next is data. So we've all heard for a long time that data is the new oil or is the new natural resource. I would argue that current prices of crude, the value of data is significantly surpassing the price and value of oil. So universities, I think, more than ever, have a critical role in guiding industry and guiding government in leveraging massive amounts of data. And quite frankly, the amount of data being generated because of COVID is astronomical. Earlier this month, Global Newswire had an article specifically around the output of big data coming out of COVID and what things will look like. So also citing that data strategies will be more central to C-level business planning than ever before, but specifically data in the areas of IoT, cybersecurity, AI and machine learning. These are all core areas of strength for our university, and certainly these are the areas where UW has been focusing on with our industry partnerships. The third is the growing skills gap, especially in STEM competencies. So look, this was an issue prior to COVID. It's just being that much more amplified because of COVID. So, the need for retraining and upskilling of the workforce really across every single sector, but specifically in technical competencies and where those technical competencies intersect with soft skills. So leadership competencies, policies and decision-making, business strategy are all areas. So this is really a long-term talent management play where universities need to step up, but certainly universities like ours. Look, University of Waterloo it has been a leader in co-op. We have over 24,000 placements every year across 6,000 companies globally. So we execute as well over 75 million of industry-sponsored research. We're no slouches when it comes to having deep partnerships with industry. But one of the things we now need to really step up to is taking that industry experience and what we deliver back to companies to the next level. So we are working very closely with select industry partners. So we're honing in on the skills and the gaps they're in that are the most important to their business recovery and their sustainability. So not just to survive, but to thrive in a post-COVID era and economy. So our job as a university is to deliver against that need. So, and we're going to do it in a continuous lifelong learning approach. And of course, now, as part of that, we have to adopt an online first only mentality, at least for the near future, in how we deliver those competencies. Look, the unfortunate reality is many workers will be disintermediated, and the rate and pace has just gotten faster because of COVID, and will continue to happen that way. Together with emerging technologies, environmental and social disruption. Look, knowledge transfer is at the core of what we do. And so now we need to take our strengths where we are unique, where we are differentiated as an institution or institutions, and support Canadian workforce and frankly, the global workforce and global companies in the best way that we know how. And quite frankly, fortunately, we have strengths that are represented across all 6 of our faculties in that area.
Thank you, Sanjeev. You've really highlighted a lot of points that we're all watching and very concerned with. I mean, the topic of big data, AI, obviously in that, and similarly, machine learning from thinking about cybersecurity, they all point to the reality that we are going to be relying a lot more, not just on the infrastructure of telecommunications to get us up to speed quite literally, but also those are the sources of innovation. Going back to what Joel said, innovation can be sometimes that spark. Some of it may mean indeed, as you pointed out, less labor, but it does potentially bring up a new opportunity for us to be efficient. So let me turn to our last but not least, and I'm going to do a second round. So everybody else get ready because I'm going to come back with a firing squad of questions to you. But I'd like to turn to my last guest, Alex Goryachev is the Managing Director of Cisco Global Co-Innovation Centers. Thank you for joining us, Alex. I want to ask you a question about the telecom industry. There's been a lot of working from home. All of us are fighting for that precious little bandwidth, including in our own homes. included, because I have 2 adult children who constantly hog every little aspect of bandwidth here. What is the things that your industry is looking at? What are you, in the big picture, what are the transformative changes that your industry has seen as we've worked from home? This is an experiment like no other, right? All of us are online at the same time, trying to get work done. And back to Craig's point that, this may be the new normal, we don't know, but what is it your industry what is it that you're looking at from your vantage point in terms of how things have changed and how much of it is long lasting?
Yeah, and thanks for having me. I think when we think about the co-innovation, it's just what we're seeing is really desire by multiple parties to stay connected, right? And at the end of the day, it's our human need to connect, right? It's not only about being education and entertainment, right? It's just about all of us being connected and making sure that while we can't connect physically, we can connect virtually and frankly, build a better future. And that's something that everybody talked about. I think, first of all, it really makes us appreciate the internet, right? And just connectivity. It's hard to even imagine what would have happened if we wouldn't have this connectivity to begin with, right? And when we think about that connectivity, I think it's essential that all of us have the opportunity to connect to the internet, right? Because it really becomes that essential utility. And if your access is interrupted or you are part of disadvantaged population, you do not have that access. That means that you can't buy groceries or your kids do not have ability to go to school. So one of the things that we are doing really, including in Canada and with the work that we're doing with the innovation centers, is really trying to make sure that everybody has that access, right? And I think that is critical, right? And then as we look forward, it's really about the application of the internet, making sure that we can expand it to education, we can expand it to healthcare, and all of those items. As we shift to working from home, security becomes a big issue, privacy becomes a big issue as the data shifts to to our places of residence. How do we properly secure it? How do we properly prepare it? How do we share that bandwidth? So there is a tremendous need for connectivity, and I really want to I think the bright side of this is this connectivity is being used for co-innovation. It's all of us coming together on this call and talking about what is it that we can do together to change this course of history, right? To find better opportunities whenever that's more opportunities for the workforce or for students, right? For example, one of the things we did with the innovation centers is virtual internships, right? So while we cannot be physically in the same spot, yet we can work together virtually to do that. So if I think about kind of going forward, right? To me, it's really not necessarily about going back to work. I've been here in Southern California. My team is all around the world. They're all remote. We're all kind of remote to each other. So the work is really what happens in between of us. It's not necessarily what happens in the offices. So it's really how do we keep that human connection going? I know video helps because we can look each other in the eyes and being open to new opportunities and connect and just, again, staying connected. It's not really about the network. Yes, it has to be robust. It has to be secure, but it's what we do with it and how we create more opportunities, especially with universities and for the students.
Obviously, that face-to-face or personal touch, it's missing. But we've been able to use technology to, frankly, fill in what void that we can. It's not the same, let's be honest, but it's not. It's making it easier. Let's also point that out. Just emotionally, stress-wise, being able to see people. I mean, I look back and think, previous worldwide recessions, worldwide pandemics, when there wasn't this kind of connectivity. I mean, it just kind of put yourself in that place. The Spanish flu and all the rest. How very different it was. Everything from our knowledge about learning about what is COVID-19, how to keep ourselves safe, but also staying connected, as you pointed out, and continuing to be working hard. I do want to point out that I think that one of the questions that I have, and I'm going to do a second round, but I'm very interested in this disproportionate impact of how this virus is hitting people. And you pointed out that everybody has the internet. Well, the challenge is that not everybody does, right? I mean, it's not, it's become, if you will, a basic good that all of us now really need to think about. And there's many remote areas, certain disadvantaged communities. I think about the Indigenous people. There's lots of places where, frankly, connectivity is not up to par. It's not the same being in an urban center like it would be abroad. Or even frankly in places as remote as parts of Canada and disadvantaged communities that are financially so. So this is not a crisis that hasn't hit, everybody's been hit differently. And so let me just kind of move to Craig if I could. I want to go back because that plays out time and time again, right? This idea that it's not the same everywhere. Certainly we'll talk to Nada about how this has impacted the SMEs and gender. But going to Craig first, how do you see this in terms of playing out across Canada? Obviously Alberta is very resource dependent. Oil prices, which you talked to or alluded to, being in the negative at one point. Oh my gosh, as a person who follows oil, that was just unbelievable. How do you see the recovery looking across the Canadian landscape?
So I think that in terms of the timing, it's going to be very similar. As provinces reopen in a gradual way, their economies will pick up through, in the summer and into the fall. But the pace of reopening could differ across the provinces, right? And so I think one of the things a lot of businesses are trying to figure out is, what happens if, I can reopen in Ontario, but I can't reopen in, another jurisdiction. And so how do you manage that? Your comment about crude oil is very important because not only are we being hit with the shock of a global pandemic and dealing with the outbreak within our own borders, but we're also experiencing an energy shock. And at one point, the price of a barrel of crude oil priced off of Western Canada Select, which is what about half of Alberta's oil is priced in, was a barrel of oil was cheaper than a Starbucks latte, right? And you can just imagine what it does to the energy sector when you have those sort of pricing. The negative pricing confuses a lot of people, but it's basically because it was a futures contract that said, if on a certain day when the contract ends, you're going to deliver this barrel of oil, and the problem is that there's no place to store it, that the inventories had been piling up. So ultimately what happened was the person that was going to receive the oil suddenly wanted to get out of that contract and was actually willing to pay somebody else to take the oil, right? And so you ended up with a bizarre situation with negative pricing. So, I think that the magnitude of the recession is going to be far deeper in Alberta. I think Alberta is going to contract. So I think the Canadian economy this year will contract about 6%. I think Alberta is going to contract about 8.5%. Saskatchewan and Newfoundland and Labrador are the other two that are going to get hit hardest, and that's again because of the oil exposure. And then if you look at the other provinces, you can actually do a ranking that Ontario is sort of the middle of the pack. Quebec is a bit above the national average. BC is actually, BC performs the best. It only contracts 5.3%. Which is like an astonishing recession. So, there is regional variation here, but in point of fact, the narrative is the same, right? And then, on the economic recovery side, I think you are going to see it being quite broadly based at differing speeds. So I think we can talk about this nationally, but being mindful that it's going to be harder for certain provinces to get back to the level of activity they had pre-COVID.
I think this certainly the one case of the negative oil selling was particular to Oklahoma and certain refinery capacities there to store. But it does say something, right? I mean, the fact that we are, and as a global economist, I've been watching the Saudi-Russia price war. This does point out a number of things I think for us to talk about. And I'm going to turn to Joel, thinking about sort of how this is going to impact innovation, because there's been a lot of hope put on the green economy, on innovation in all things, climate related. But I'm a bit pessimistic because I look at $20 a barrel and wonder, I don't think we're going to be moving away from that environment for quite some time, seeing how low those oil prices are, particularly. But let me turn to Joel, because I want to pick up on this idea of innovation. And green innovation is one, of course, that many have talked about. But what are you looking for? What are you most optimistic about in terms of where you will find innovation?
So good question. So when I think about and maybe I won't answer it 100% directly, but let me at least share some thoughts. So when I think it's been mentioned, we're on the cusp of some major technological revolutions, mostly due to robotics and AI. They're going to have far-sweeping effects. And one thing we have to think about is, well, what kinds of effects are they going to have, and what's the timing going to look like? And so I think we effectively go through three different phases. And in phase one, you have a whole bunch of firms. So let me take AI, for example, right? And so AI is fundamentally a better technology for prediction. So with machine learning, a big enough data set, algorithm, et cetera, you can make a better prediction whether you are predicting, the quantity of your good that's going to be purchased tomorrow in a particular store, or whatever you want. The number of COVID cases, as you were mentioning earlier, anything like that. And so if it is a better prediction technology, I think phase one of adopting this new technology is going to be firms are going to sit there and say, okay, here's my production process, and there's like 10 different pieces. I'm going to look at every step of this and say, okay, where am I doing prediction? And could I get rid of that person and just plop in the machine? Right. And so that's exactly what I think to a large extent is already happening, mostly with the bigger firms. The smaller firms are already sort of lagging behind, but that's what we can expect to see. And so robots are going to start replacing those manual repetitive jobs. AI is going to start replacing that prediction. I think that is fairly straightforward. What's going to happen next is a little less straightforward. And this is, by the way, exactly what happened with computers, right? So the first step was computers are replacing bookkeepers. And the next step was, well, how can we completely reinvent our processes to use the power of computers? And so the same thing is going to happen now. And so to give you a stupid example, if we can do better prediction, imagine that you're Loblaws Corporation, right? And you can do better prediction. The first thing you're going to do is just embed that to predict inventories and how much, things that you're already doing. But the next phase is you're going to say, can I completely remodel my operations using these much better technologies? And so, for example, imagine you could do predictions so well that you knew who was going to need milk and when, and who was going to need bread, and well, you'd essentially close down most of your brick and mortar stores. What you would do is you'd have a delivery truck that would be driving around the neighborhoods, dropping off exactly what every single customer wanted. Your operations would be completely upended based on the fact that you have these better technologies. Now, right now, it's hard for us to see that. It's going to take time for us to implement and completely change those things, much like it did with the ICT revolution. That'll be phase two. And then there's going to be phase three. And phase three is even harder for us to see. Phase three is, how are these, transformational technologies going to combine with other technologies to create completely new things that we never even dreamed of? Right. And so I can't even give you an example there, because it literally is entirely new industries, entirely new products, entirely new ways of doing everything, because it's the combinatorial power is going to be this exponential power. But so that's what I would expect.
So Joel, this is really important and I want to turn to Nada, because this really shows that, these are technologies that are and applications of technologies that, favor the big guys, right? It favors the big companies and corporations, because you have more data points, back to this very concept that Sanjeev mentioned about, the data is the new oil. And so if you're a corporation with, like Loblaws, or if you're a Costco, you get that big picture. But that means the little guys, the small and medium-sized firms, they're at a disadvantage, right? I mean, so Nada, turning to you, because you're really focused and your research is great and talking about how this impacts the small and medium-sized enterprises. How do you see this playing out? What is your thoughts on this, big versus small?
That's a great question. And as I mentioned before, it's it's looking really tough for the small guys right now. And, obviously this creates an environment that's conducive to these mergers and acquisitions, and also kind of the death of some of these smaller firms. I think policy is really important here. I know there's some policymakers in the US who are really pushing for some policy that prevents mergers and acquisitions during these crisis times. I think that's important because, essentially, I think that, entrepreneurs and entrepreneurial thinking are what's going to get us out of this, right? And it's important that we support these small businesses, medium-sized businesses, and to continue supporting our entrepreneurs. And, I have some thoughts on, opportunity recognition, what entrepreneurs can be thinking of right now so that they stay relevant. I want to be very clear that I'm very much aware that, I'm going to share these thoughts from a place of privilege. It's not easy times, especially for entrepreneurs and small businesses, both small business owners. So, when we talk about new opportunities and what they can do, I think we also be very empathetic to, a lot of these people are trying to just figure out how to feed their family for the next week. So it's something that I don't take lightly, and I'm coming from a place of compassion. So, we've seen, and we're going to continue to see, that these smaller companies are going to have to rethink their business, and, make deviations on their business models and even their products or their service offerings. This requires agility, innovativeness, and risk. And, and that's what entrepreneurial companies are good at. This is what small businesses are good at. So they're well positioned to look for problems that need solving and that they can solve. It's going to require experimenting and idea testing, but this is incredibly critical to stay relevant in this point. And a few things that I would suggest or think, or for these business owners, because I know some of them are watching right now, to think about is, this idea of, effectual versus causal thinking. So effectual thinking is what we see entrepreneurs really good at. They look at, what do I have? What are the resources I have? What am I really good at? And who do I know? And then finding opportunity that is based on this, versus causal thinking, which is, this managerial thinking of, what is our goal? We're going to narrow in on a goal, and then let's figure out what resources and capabilities we need to get there. So now is the time to focus on your resources and capabilities you have. And we tend to view companies in terms of products and markets, but I think new opportunities can open up if you focus on your resources, like your assets and your capabilities and what you're good at. And I want to give a really great example. I love this. So Inksmith, some of you may have heard of, is a local company, and prior to COVID, they were doing 3D printed education tools, which are clearly hard to sell, during a time like this. But they had a bunch of 3D printers, and they were really good at design. And very quickly, they shifted their focus to address the pandemic to make these 3D printed face shields, which they have cleverly coined the Canadian Shield. So these pivots can be life-saving for a small company right now. But I would also caution that, that they're not permanent pivots, to think of temporary pivots and learn from this situation, because, pivots can be bad, and they require, and should be pre-assessed. So a lot of testing. And, the other thing is to remember that the rules of competition or strategy still exist, right? So if you're offering a new product or service during this time that's really needed, that may not be enough moving forward, that you're going to have to actually eventually think about imitators and what that you need to still be doing something different in some way, offering something better, less costly. The other thing I think that we're going to see is a lot more partnerships, resource sharing, complementary small businesses working together. And I think this can make small businesses more resilient. A great example is, a lot of restaurants have had to move online, and there's a great local startup who's helped these small businesses do this. Sociavore allows them to offer their customers online ordering. So a lot of these partnerships and really thinking out of the box, I think is, and again, I tend to take a more positive outlook on things. I think this is going to be key to stay competitive right now.
Right now, but certainly watching how this is affecting Main Street, how this is affecting all of these small and medium-sized enterprises, and a shout out to, yeah, fantastic innovation that we've seen coming from some of those companies. The one that you noted is one that I've been following, and it's really quite remarkable. And they've been able to actually show that they care. So they've also been able to elevate their brand at a time when it's really hard in a situation to get noticed. Sanjeev, let me go back to you. You know, you talked about lifelong learning, and you know, what can a small company, what can a large company get from a university? I mean, why turn to us, right? Why turn to the university sector to get some of these great ideas and teaching? How does that you know, become realized into kind of changing their production and their ways of thinking? Can you give us a little more?
Yeah, absolutely, Besma. I mean, I've been itching while others have been talking on this small and medium business discussion. You know, digital transformation is not a new term. It's a 20-year-old term, right? Getting yourself online is not a new concept. These are concepts that have been around for a long time, and some have chosen to embrace them and others haven't chosen to embrace them. But the challenge we're really going to face now is the disparity is going to grow significantly because the cost of entry is going to go up. And what I mean by that is if you now begin to layer AI functionality and the need for cybersecurity prowess, if you're going to move to a digital framework, the cost of entry gets higher and higher and higher. And so you're going to see a big split between big companies and small companies, especially mom and pop shops who didn't embrace digital transformation, and now if they want to survive, they must do it. So, skills still continues to play a really important part here. So when we think about our strategy for lifelong learning at the university, we're going to address it in two modes. One is open learning, so that people can advance their skills and technology. So even those who work in small and medium business can begin to acquire technical competencies that can help smaller business move forward. We're also going to look at it from a B2B perspective, is working very closely with big business to define specific needs for their industries, but then transition those back down to smaller companies through associations. And again, that could be health associations, financial investment associations. It doesn't really matter what the sector is. One of the other things I will just say, I've also seen a lot of large corporate CEOs step up in this time and say, adopt a small guy, right? Whether it's a startup or whether it's a small business, and not because you want to acquire them, but because this is necessary to do for our economy to come out of this in a good way. So, my hat's off to those CEOs.
Absolutely. It's not an easy time. Alex, I just want to leave a couple of thoughts for you to bring us to a close. But, picking up on what Sanjeev mentioned, this digital transformation, I have a big question, which is, are we ready for the next phase? Obviously, those of us who are looking at emerging technologies, looking at questions about 5G and the infrastructure, and I just want to shout out to some of my great colleagues who work in this space. They're going to be doing their own webinar in a few weeks' time on the GEDI rebooting series, so please stay tuned to that. But what do you say, Alex, to policymakers about the infrastructure, about the readiness? What do we need? And you're going to give it to us in just a few minutes because we want to turn to the questions.
Absolutely, and not necessarily to the policymakers, but I think we are ready for the new phase, and for one simple reason. I think for as long as I can remember, I'm not an expert in history, but I think it's the first time that I can think about when the entire humanity was working together with amazing minds, be that in business or universities, on solving one problem. And that problem is multidimensional, but it's a problem of our prosperity and survival. And we're well equipped because we have the tools, right? We've talked about small businesses. I think small businesses and startups are incredibly innovative, right? If I look at the city that I'm in, or the cities where the innovation centers are, the response and the ability to pivot by small businesses is pretty incredible. And it blows me away. Sometimes it's way better than big companies. the way public sector is responding, the way universities are responding, the way students are coming together to form those new businesses, right? The level of partnerships, right? Competitors coming together to solve problems, it's pretty incredible. So to be honest, I'm very optimistic about the future. I do believe that connectivity is the basic human right. It is that utility that we need as much as the electricity. So getting everybody connected means that everybody is empowered. And if we're empowered to do great things, I know those great things are going to happen. So those are my thoughts.
That's great, Alex. I couldn't agree with you more. So on that note, we're going to switch to Bridget. Bridget, you're going to cue in our lovely questions from the audience.
That's right. That's right. Thank you so much. A very big thank you to you, Besma, for moderating the discussion today, and to Joel, Anada, Sanjeev, Craig, Alex, for your excellent contributions. Your insights and expertise were extremely valuable. Perhaps you heard something today that intrigued you to explore further. I invite you to reach out to me, Bridget Maloney, at the email on the screen. For those of you who may not be familiar with GEDI, it is the gateway for enterprises to discover innovation at the University of Waterloo. Our next panel is next Wednesday, May 27th, and the topic is rebooting supply chain considerations. So I encourage you to go to uwaterloo.ca/GEDI/events for information and registration. And we look forward to seeing you then. So we actually received a good number of questions, both pre-registration and during the panel session. And so welcome to this portion, the Q&A portion of the session. And thanks to the audience for submitting some great questions. And I've been provided with a selection of the questions to put to the panel. And all of the panelists, including the moderator, are welcome to contribute to the discussion of the question. And we will try and keep answers somewhat short, if possible, just to allow maximum number of questions. So I have the first question here, and it was submitted online during the webinar registration. And I am going to direct that one to Joel. So Joel, the question is, how can we build resilience into our economy and key sectors like manufacturing to deal with crisis level events, especially for hands-on activities like the factory floor or lab-based R&D?
Wow, that's a great question. I wish I knew the answer to that question. Well, I guess in the short term, I was alluding to this earlier, on the manufacturing floor. One of the biggest uncertainties is, are we going to get a second wave? Are we going to get another virus coming our way in a few years? And so the less reliant you are on people in your factory floor, the less close they are to each other, the more resilient that you're going to be. I think that's kind of an obvious one. I think that's going to be one of the key drivers of this automation wave that I think is going to be coming soon. In terms of, I think the second part of your question was, how can we be more resilient in terms of R&D, I think? And there, from my own research, I would say it's very important that you stay attuned to R&D that's happening in many different places. And so make sure that you have a presence, even if it's like someone you talk to in Silicon Valley every so often. Have a presence there, have a presence near key universities, like have someone in Waterloo, have someone in, at MIT, and just so you get this diversity of opinions, of R&D results, of knowledge as quickly as possible, so that you have that breadth and can respond quickly to anything that you need to respond to.
I'm noticing Sanjeev has his hand up. So Sanjeev, fire away.
Sure. I just want to throw into the mix here a little bit that viruses are physical and viruses are digital. So as we think about resiliency, Joel, to your point on the shop floor becoming fully automated, I think we always have to be thinking about how am I susceptible both in the physical and digital world, right? I mean, it's so easy to launch hack a virus into a fully automated environment and down you go. So it's we have to consistently be thinking about preventative strategies, cybersecurity strategies, as we move down this path of automation. Without a doubt, it's going to happen post-COVID, but that to me is something that has to be paramount.
Thank you, Joel and Sanjeev. So I'm going to move to the next question, which also came from the online registration process. And Besma, we're going to ask this question of you. So as we reboot from COVID-19, what can we reasonably contemplate doing in a new way? Some things will continue as before, but what do you foresee changing in our approach to the environment, healthcare, and social support, such as minimum income?
Yeah, so that's a great question. There's been a lot of discussion about universal basic income, and certainly many people look at the $2,000 CERB that our government is giving to many Canadians as perhaps maybe this is a good thing to do and continue moving forward. I'm not going to say that I'm a fan of that for a lot of reasons, but let me just kind of tease that out a little bit. Look, I think that there is going to be some really important discussions about minimum wage. I think it's appalling that we still have people, particularly in our healthcare sector, who are making just minimum wage. The disastrous impact of this virus on the long-term care centers, for example, which tend to be very dependent on personal support care workers. These are not always nurses. A lot of them are immigrants. They're women, and they tend to be nurses who are trained abroad, who are coming here and doing as close as they can to something close to nursing. And they're not being paid a decent wage. And the fact that they have seen PSWs move from LTC, long-term care, to long-term care to be able to eke out a living just shows that we're not doing enough. So there's going to be a lot of conversations about paying people a proper wage. And I think this is time. Certainly same thing with grocery care workers or grocery workers, other parts of the sector, our delivery people. This is going to be an enormous change to the gig economy. I mean, the gig economy is, for a lot of people, not a great distributive mechanism. It does mean that a lot of people rely on that as their main source of income. It's not an add-on. We know that most people in the gig economy, that's what they do. And this has been an area that we've depended on quite a bit. So I think there's going to be lots of conversations. And I'm going to turn to Joel, who I know had his hand up and is the real economist. I'm just a political economist who pretends to play one. So I'll let Joel say what he thinks about that too.
Thank you. So just I guess a quick thought on universal basic income. And so today I've had the hat on that has been saying that automation is a fantastic thing. This is our chance. Let's jump on it. Over the last 5-6 years, anyone that sort of knows me, I've had the other hat that's been going around to the G7, the OECD, et cetera, telling them that automation is going to be this disastrous thing, that everyone's going to lose their jobs and it's going to create tremendous inequality, et cetera, et cetera. So why am I changing my tune? Part of the reason why I'm changing my tune and why I think, so first of all, I think automation is coming. It is going to come regardless of what we do, and it is going to make us richer. The question is, can we put in place the right policies to make sure that we all benefit from it and not just a relatively few? And so, for example, universal basic income might be something that we should at least consider at this point. I don't know if it'll be a solution or not. But my point is, why am I sort of arguing that right now we should push as hard as possible with automation when already tons of people don't have a job? Well, the reason is that we also have a consensus in society. We have a willingness to help others. We have government willing to spend to make sure that no one is left behind right now. And so that's why I actually think that right now is a great time to have this really turbulent and I guess these events of automation that are really going to hurt a lot of people, because I also think that right now we can provide these supports and help them transition through retraining, financial support, et cetera, et cetera.
I'm just going to pick up on that because, picking
Sure.
up on Nada's point of Recession, there's also a recovery, right? And this idea that there's investment in things like the construction, the stimulus, the shovel-ready type, stimulus packages. Those are not necessarily going to be the solution or panacea that we think they are if we're talking about shifting society away. And I like this idea of thinking about how we can retool, back to Sanjeev's point of lifelong learning and getting the skills, right? Getting our workforce ready. As we're all dependent on being online today, let's get our workforce ready to be ready for the next phase of this transformation, which is an important value that GEDI has. But again, the big question for us is, how do we get policymakers and businesses and academics and experts having a conversation of where we want to go and what are the tools that we need to get there?
Just to jump into this conversation, I want to be mindful of the fact that when the economy went into recession, initially you saw the bulk of the job losses being with women. But with the latest employment report from Statistics Canada, the drop in female employment's been 17% and male's been 14.5%. So statistically, StatsCan basically has said that that's not statistically significant. So actually what you're getting is a gender balanced recession, which is atypical because typically if you look back in recessions, it's the goods producing industries that tends to be more male dominated that actually gets the biggest hit. So it doesn't actually change the reference that we need policies that are going to help support job creation for women during the recovery. But we just need to be mindful in terms of like the magnitude of the job losses is actually, what you're getting is both going down. What happened was there's more women in the hospitality, tourism, the sectors that got hit the hardest first. And then the male job losses started to come in and basically it equalized it out. On the basic income issue, one of the first things the government did was announce that they were expanding access to the employment insurance program and launching an EI equivalent program for non-EI eligible workers. That told us that the existing program was broken, that it was inadequate to deal with the strains in the labor market. So we definitely need to redesign our income support framework. The challenge is governments are going to be massively indebted. So it's not clear to me, and I was on the expert advisory panel for the Ontario basic income pilot project. So this is an area that I'm quite passionate about. But as an economist, I can't figure out how to make it fiscally affordable and address the issue of the disincentive to work. But what I can tell you is the current income support framework is archaic and actually needs to be transformed. So I think that that's one of the silver linings. We'll finally get a better income support program. But when we talk about the basic income, just be mindful, those programs are enormously expensive. And we're going to have incredibly indebted governments.
Great point, Craig. Can I get Neda in here? I saw her hand go up and I'd love her feedback on
Sure.
this. I know she's very much following this she session, she covering conversation of our colleague Yarmeen. So please.
The numbers that Craig mentioned, and the statistically significant, if we even put that aside, I think the patterns that we see right now in layoffs, I think, women and minorities are potentially overrepresented in industries at high risk right now, retail, hospitality, recreation. But I think there's more to the story than that. We have research that shows that, women and minorities are in greater danger of losing their jobs in troubled times, and not just because they work in high layoff risk industries, but because when companies, have to make these decisions to lay off individuals, women and minorities tend to be at the top of this list, right? We have to make rapid decisions sometimes, and even though decision making should be gender neutral, I think the research shows otherwise. And this is because when we think of layoffs, we tend to think of we look at position and tenure, so like last hired, first fired. And women minorities tend to fill in the most marginal, low authority positions. If we look at the Great Recession, so what happened around 2008, even though this recession hit more male-dominant industries, almost 13% of women lost their jobs, whereas only 9% of them lost their jobs. So, I would be careful, in terms of thinking that this is just industry specific and the implications of this in the long run. Also, this, what's going on right now is so different. It's so different in that everyone's home right now. And when everyone's home and everyone needs to be taken care of, women tend to be the ones that, take on this responsibility more. There's lots of data that shows the differences here. And so, how do you expect women to stay in work or find work or think of their business when they're responsible for other things? So, just something that I think is really important to keep in mind as we think of a more gender neutral impact to this recession.
Just add that there's lots of research to be done on this. That's the key thing with all of this data coming. We've become this enormous petri dish in trying to figure out exactly how this virus impacts everyone. Bridget, we have another question.
Yes, yes. Thank you, everyone. Craig, you touched on this a little bit. If there are additional comments to make, that would be fantastic. So the question is, there is a lot of conflicting dialogue coming out about the depth of the impact COVID has had on the economy and our ability to recover. Can you comment on what Canada's recovery will look like and how it will compare with the rest of the world, especially in terms of things like real estate, cost of living, etc.?
So if we think about the Canadian business, or like think about the depth of the recession in Canada, I think it's going to be, it's going to be deeper than in the United States. And if we think about Canada, we're very integrated into the US economy. Each province does more north-south trade than it does east-west. And so the US recession is going to drag down Canada along with it. And the US recovery will help shape the Canadian recovery. But then we have the added impact of the energy shock. And Canada is more exposed to commodity prices and more leveraged to resource sectors than the US. And so I expect that what's going to happen is the Canadian downturn is going to be more pronounced than that in the United States. Regrettably, I also think that the commodity shock is going to be harder to recover from, because once you've had the big, decline in demand for energy, and you've had the increase in supply, you actually can't get the recovery until you work down the inventories. And so I think that this is going to be one of the big challenges for the energy sector. Regrettably, I think from an industry point of view, the industries that were first into the downturn are actually going to be the industries that are the slowest to recover. Like it's going to take them the hardest. It's going to be the hardest for them to get back to where they started. So, extractive industries like energy, manufacturing, likely to be, very slow recovering, as well as though accommodation and accommodation, tourism, retail. These are all sectors that were hit the hardest, but are likely to be the slowest to actually recover. There is a raging debate inside the economics community about the outlook for real estate and real estate prices. And the argument that the problem is, the reason for the debate is there's a massive drop in demand because of the lockdown and then the consequences of the higher unemployment, lower income. Generally that's, all negative for the real estate cycle. And in fact, mortgage rates have gone up, not down. And the reason is because banks are giving people deferrals on their mortgages if they're in dire financial straits. The banks are trying to sort of offset some of that financial loss by maintaining higher mortgage rates. So as a consequence, there's a lot of negative out there in terms of demand for real estate, but this is also an environment where people are likely to say it's not a good time to sell. And so what you get is a huge drop in supply. And if you had, if they're equal, if demand and supply drop equally, then you don't get any price effect, right? If the drop in demand is greater than the drop in supply, now you've got a price effect. And this is why you have a debate right now. So if you look at some of the bank forecasts, they're forecasting home prices are going to increase, later this year and into next. And CMHC just came out with a report saying they think the debt to income ratio in Canada could go up to 230%, and you could have prices decline as much as 18%, right? And so, and the simple answer is the economics community doesn't know, right? We don't actually know how the supply is going to change relative to the demand. My personal bet is that you're going to see prices decline about 5% nationally and about 10% in our biggest cities. And in particular, the reason why I think you're going to see that decline is with the drop in tourism and mobility. I think there's a lot of investment properties like Airbnbs that are actually going to get put up on the market. So I think you're going to see like condo supply increase relative to, and at the same time demand's weak. And so I think you're going to see some price movements on that front. So it'll make, good news in terms of increasing affordability for condos, but in general, a negative story in terms of lower prices. But like I said, there actually is a huge debate about where real estate's going. The one thing we know is commercial real estate is going to get hit really hard here. And the reason is, number one, you have the recession, but number two, people are shifting to remote work and are likely to stay in remote work. So the demand for commercial real estate is going to go down. And a lot of businesses are going to realize they can save money if they keep workers working remotely.
I mean, I've been reading about these articles of the end of the office, right? I mean, it's become really interesting and fashionable to talk about, are we all going to be just working from home? Totally agree with you on the commercial and on the retail, and even on the housing side. I mean, the other thing is long-term care centers and, retirement living. That's not attractive anymore to a lot of people who are thinking about moving into that space, which also means the inventory. I think about, originally being from Toronto, that those prime real estate homes that one had hoped would get on the market, as people get up to a certain age and want to move on to these kinds of places, they're not going to be going on the market anytime soon. We saw the disastrous situation in long-term care centers and in the retirement villages and so forth. So there's going to be a lot of interesting things going on in the real estate sector for sure. And I know Joel had his hand up, so let's turn to our favorite economist.
Sorry, I thought Craig was our favorite economist.
I just want to make you blush, Joel.
So on the question of whether Canada is going to get hit harder than the U.S., I agree with everything Craig said. I just wanted to add one more thing, maybe a bit of insight from epidemiology, and the reality is that Canada has been very good at the lockdown, maybe with the exception of Quebec, Montreal. And paradoxically, that might actually mean that we're going to get hurt much more economically. So, as of about a month ago, New York had prevalence rates of about 21%, which I suspect probably means that they're now sitting at like 30-40% of people in New York City have been infected with the virus at some point, and most of them have recovered. So that means that assuming you keep your immunity and assuming there isn't a big mutation, they're going to be at herd immunity really quickly. And even if they're not at full herd immunity, it means that it's going to be a lot harder for like a big new wave to take hold. So they can be a lot more liberal, open, a lot faster, et cetera. In Canada, again, outside of Montreal, we are sitting at prevalence rates. Again, it depends on how many asymptotic cases you think there are for every confirmed case. But, we're probably sitting at rates of like maximum 2%, maybe 3%, maybe whatever, but really, really low. So we haven't built any degree of herd immunity. And therefore, we're going to be in this for the long run unless we open up and we get a massive jump in cases. So in the U.S., to some extent, relative to us, they're trading people's lives for faster economic recovery. That's one way of looking at it.
Yeah. And I'm sure we're all watching Sweden, we're all watching Brazil, other places to see whether or not they're going to have a faster recovery. That herd immunity concept is a really important one. I know we only have 5 more minutes, Bridget, but do we have time for one more question?
Sure. How about one for Alex? So Alex, are there ways that the business sector can address issues of unequal access to the virtual economy? Is there a role for government to set norms or level the playing field?
Yeah, I think there's always opportunity for the government and the business, right? And I think you're really ensuring from a government perspective, I think it's really investing in access, right? Irrespective of where those places are, whenever they're localized or remote. I mean, to that point, I think we're seeing that positive development all around the world. For example, just in Canada, in Toronto, we've partnered with the city and the service provider to make sure that there are access points throughout the city, because many people were using the internet at the public library, or they don't necessarily have the bandwidth or the plans on their cell phones. So that's a critical role that both government and community can play in ensuring that that people have access. And then I think from an employer perspective, I think all of us are keenly interested in making sure that our employees have the bandwidth and capabilities. And I think investing in work from home capabilities, I think, are essential. Yes, right now, this is a necessity. Going forward, for all we know, that as we recover, and of course we will recover, this might be an employee choice. And there may be many people that are not going to go back to the office, right? And they would prefer to stay at home. So giving employees that choice, investing in their workplace at home and bandwidth, connectivity, I think that's essential. right? And then frankly, in as much as they're investing in office supplies in the office environment, perhaps there should be an investment in supporting employees at home.
Yeah, thank you. And I want to turn to Sanjeev in a second, but I think there's going to be a lot of conversation also about 5G, for example, which is really going to provide us with that kind of innovation and bandwidth to do a lot of the things that we want to do, from video streaming to you name it. So Sanjeev, if I can turn to you, I don't want to take away from what you were probably going to comment on, Alex, but if you could also think about talking about some of our own exploration with 5G technology at the University of Waterloo and through GEDI, that would be amazing.
Yeah, just really briefly on the 5G piece. I mean, clearly it presents tremendous opportunities. I think what we're seeing faster than we've ever seen before is the collaboration of research globally. So imagine if we were able to take 5G concepts or capabilities to the edge, to the laboratory, and really make it a in-time, immediate ability to collaborate across multiple labs in regions, across borders. 5G really presents tremendous opportunity to drive that kind of collaboration and discovery at a faster rate and pace than we ever have. On the digital transformation piece, I'd be remiss if I didn't mention, in the interest of parity of access to technology and access to digital transformation, which of course we discussed is an impediment for smaller businesses. One of the things that we have done at the university is we've unleashed a program around digital skills for our co-op students. We have a large number of co-op students who didn't land roles. Many of them did, thankfully, through our industry partners. Those who haven't, we are actually uplifting their skills so they can go out and support small and medium businesses who can't afford a large vendor to come in and help them digitally transform, having online payments and a presence, a web presence as well. So this is a mechanism that I think as a university, we've stepped up to in a great way to provide a low cost access to transitionary skills to get small businesses moving forward and moving out of the challenges that they currently have. And by the way, leveraging monies from the government to pay those students. So it's a win-win.
So great initiative, Sanjeev, and thanks to you and to Nora McRae for making that happen. It's an absolute wonderful way we're giving back to our community too. So Bridget, you're going to wrap us up.
Yes, thanks, Besma. So fantastic, everyone. Unfortunately, we've run out of time to take more questions that are still in the queue. But thank you again to you, the audience, for your participation, and a very big thank you to Besma, Joel, Nada, Sanjeev, Craig, and Alex for answering the questions. It's been a highly informative and really enlightening discussion on very topical matters. So thank you very much. If you have any further questions or perhaps heard something today that intrigued you to explore further, again, I invite you to reach out to me, Bridget Maloney. Yes, our next session's on the 27th next week. The topic is rebooting, supply chain considerations. You'll see we have dates now for all of the following sessions, so please mark your calendars. And go to uwaterloo.ca/JEDI/events for more information and registration. And we look forward to seeing you then. And this closes our session for today. And so thank you very much for everything, everyone, for all your participation.